Welcome back. So, Dr. Nevin, when you were talking, you mentioned the issue of mortgage, and yes, have come a way. You say the pensions come some distance in terms of the distance gone since it started out, but mortgage is still way down there. But yet, you say private sector lending is on the right path.
Well, the private sector lending is not just mortgages, it's to all sorts of industries and individuals. And it's on the right path in the sense that, when I first arrived in the country, there was very little lending by the banks to the private sector. What they were doing was taking deposits, and then they were buying government securities. And that's that's an easy business, but you're not taking any risk, you're not contributing. And in fact, former governor of the CBN, Governor Sanusi, had a term which is to ensure that the financial system contributes to the real economy. So he wanted to see private sector lending. The CBN has encouraged it. And it is on the right track. But one, I think, unfortunate thing that happened is the time that the banks really stepped up to lend to the private sector, the biggest time was during the power privatization. So they'd been criticized for not lending. We privatized the power system. The banks stepped up and lent to the GenCos and the DISCOs. And sadly, it was not structured in a way for them to prosper. So in fact, the one time they really did what they should for the country, they ended up losing a significant amount. And we all know that the GenCos and DISCOs, almost all of them are in grave financial difficulty. But I think the direction of travel is that they will lend to the private sector. The mortgage issue is not driven by the banks. They have not created the problem. The problem is land registry, title, and issues like that. If they get solved, the banks will be able to do more mortgage lending on that. So I think there's progress there, but there's a long way to go. If I could just touch on one other issue. People here often talk about the high interest rates. And obviously, this last year has been very difficult because inflation has come up and interest rates have risen more. But there was a period actually when interest rates were dropping in Nigeria, I think about 18 months ago. Now the reason, in the long run, I think interest rates will be good in Nigeria is because of this pension money. So the pension money, we mentioned 6 trillion naira, growing very rapidly. 70% of the money in pension buys government securities. So there's a huge demand for the government securities, and when you have that kind of demand, it drives down interest rates. So even though we're in a lot of difficulty right now, I'm confident if we can kind of get through the current crisis, a year, 18 months, we'll start to see interest rates actually decline.
We'll come back to look at what your optimism tied with what the World Bank says and the IMF. But let me ask Mr. Iyori. Mr. Iyori, the private sector lending, the situation in the market, and moving out of the point where we find ourselves vis-a-vis what I just mentioned about the World Bank's prediction that Nigeria will come out of recession this year. What are your thoughts on this?
Well, it's nice to know what the World Bank thinks about what we're doing. Like he said, which is the key thing, basically, our markets are not inclusive and they're not working well. And this has been, like I said earlier on, it's been over 30 years of mismanagement. What I mean by mismanagement, for example, and I explained it the last time, is that more than half of the currency notes you print, which is supposed to cover all of the trade and exchange in the country, serve only this public sector, the civil service, which is less than 5 or 10%. What you're saying, in effect, is that the remaining trade and exchange, whether raw materials in the countryside, really can't index themselves to the value of the naira. So for me, the underlying issue here is your ability to manage the naira properly for value internally. Then all of those derivatives you get in the marketplace, like the pension, like the housing, like mortgages, will fall in place. Right now, the basis for distribution of money is weak and is flawed. Until that is done, you can't achieve much. Thank you.
Okay, let me ask this question quickly, because I know that mortgage is something that most Nigerians will want to, have a roof over their heads. I know the parameters may not be the same for UK and where you are at Nigeria, but tell us, what can we borrow from that system that can help us in terms of our mortgage process?
Yeah, the first thing you want to borrow from the system is see how you can understand the concept of money. In the sixth form, that was many years ago now, which was in 1974, Bank of England published a document explaining how the overhead tank and how money circulates through the whole economy. So if you see a man on the street of England reading the newspaper, he knows exactly what all the indices are in the budget, and he can interpret it. A situation where most people do not know what is going on, where you can't pay salaries, the markets are not working well. You can't really run a mortgage. That's the problem. The currency inflation is through the roof. It says the price of credit is going to come down. I don't see the price of credit coming down. If you can't achieve a true value for the currency, you can't defend the currency. I agree totally with Tito Peter's side. He had been caustic in his comments. The currency is not well managed, and until you do that, there's very little you can do with any of the derivatives you want to produce. Thank you.
Okay, Dr. Nevin, he's mentioned I picked out two things, all of them tied to one. The concept of money. He said the distribution of money is weak in Nigeria. Then he's talked about the UK, what they have, where the ordinary man on the streets will understand where when they say 5 billion naira, for instance, for growth, they understand where that money is going to. So if he picks up the newspaper and he's seeing that, he understands exactly, and he can see it. But so how would all of that tie in into a system that is holistic and moving forward?
Well, I think in the financial system as a whole, it's a big benefit for people to be educated. I mean, from a personal viewpoint, you need to know how money works, how interest works, how borrowing works, how you save for retirement, how you do a mortgage. So, I mean, we have lots of needs in this country, but one need is obviously for more education. And Dr. Evora is exactly right that we're not strong in those institutions. And a better educated community, better education in Nigeria in these matters would really help us.
Okay, let me quickly go back to the pension issue here. The report also states that the success of Nigeria's auto-enrollment pension model is a bright spot, you said. So how did we achieve that?
Well, I think, I only arrived in the country in 2008, so I don't know the whole history, but I gather from when I've worked with the pension industry that prior to this incarnation, people put money in their pension or thought they had money in their pension, and when they came to retire, there was no money. It had been diverted or inflation or some other. So this PENCOM was set up to say we're going to solve that problem, and we're going to have some basic principles. I mean, one of the most important principles is the separation of the investment, the PFA, from the custodian. So there's only a small number of custodians in the country. They're all very reputable companies, and they hold your assets. And someone who holds the assets can't also be an investor. And then the investors, the PFAs, are also tightly regulated. What they invest in is tightly regulated. So you must have seen, there's a lot of debate. People are saying, why can't we tap that money for infrastructure or for this development? And I think that PENCOM and the government are doing exactly the right thing, which is they're being very cautious. They're saying, look, we're not going to change the rules that quickly until we know, because this is people's pension money. They need to know. Every month you get an alert that tells you how much you have, and you want to know they're investing in things that are safe, and that when you come to retire, that your money will be there. And that's why, as I said earlier, 70% of the money is invested in Naira, in government bonds, because those are safe. And so I don't want to see the government move off that too quickly and upset that principle, because the last thing we need with the pension system is some kind of scandal where the PFA loses people's money. That's just, we can't afford that.
Dr. Nevin, thank you so much. If you had in 10 seconds a piece of advice for the government and for the people, what would it be?
Well, we rank 169th in ease of doing business. If we don't get to 100th or 50th, we will not be successful. No one is going to invest in Nigeria. No Nigerian and no outsider will invest while we continue to be at 169th. So that number has to move.
Thank you so much, Dr. Andrew Nevin, Chief Economist, PricewaterhouseCoopers, and Charles Iyore. Thank you for speaking with us, for sharing your thoughts with us. And that is where we draw the curtain on Sunrise today. It has been a fast-moving train. You see, time flies when you're having fun. Thank you so much. I'm Neota Igbe.
Thank you for your time. I am Yomi Otaigbe. Do enjoy the rest of your day.
We do want to apologize to our viewers and those who missed the show, and then some segments were rushed or started late. The traffic situation was really bad this morning. But don't worry, come next Saturday, we will be back here. We'll have more fun. Bye-bye.